Hello, good evening, everyone. Good to see every one of you here. My name is Alex from MarketWise Asia. Today is the 23rd of December 2021. It is a Thursday evening because tomorrow it is Christmas Eve. So I won't be doing my Facebook Live. I'll be enjoying my turkey with my family. So today, a special night, okay? A special Christmas edition, okay? So I'm wearing this Christmas hairband. Actually, by the way, this Christmas hairband is not mine. This is my daughter's Christmas hairband. Okay, so I wanted to because I asked in the Facebook and Telegram said whether I should wear a Santa cap tonight or not. I think some of you say yes, why not, and such, right? So I wanted to go and buy a Santa cap, but I cannot find a Santa cap today. I mean that in the retail store, lah. Okay, in the retail store. So actually in the afternoon, I went for lunch with my friends. Then I go to town, Center Point, Decathlon, and such, and I can't really find a Santa hat. And then I went to my parents' house for a Christmas dinner near my parents' heartland. I lived in Bukit Batok previously, so I also cannot find a Santa hat. In fact, I'm not sure about you. Some of these heartland stores, like those value stores, right? They are already, selling the Chinese New Year decoration. This Chun Lian and the Chinese New Year deco, and Christmas is not even over yet. So I really, really, really cannot find a Santa cap. Of course I know Daiso should have, but I didn't pass by Daiso lah, so I didn't go to Daiso. So else all the retail store in Singapore, I really cannot find a Santa hat. So I have to use this hairband, which is my daughter's. Okay, do I look cute or not? Okay, let me take a look at the comments right now. So this is a special edition. So I will only wear this Santa band one time per year. All right, so let me take a look at the comments. Okay, hello Jerry, hello Christopher, hello Han Hock, hello Danny. Danny's the first comments, right? Hello Sky, Willing, Felix, Bokwi, Amanda, Sufian, Thelma. Thelma, is this the first time you're attending my Facebook Live? Benson, Leon, okay. Bunseng, Mary, Beast Consultant Para. Oi, hello, from Philippines here, right? Good evening over here. Siva, Pei Wen, Adrian, Jerry, the hairband looks good on me. All right, Bernard, okay, Tracy and such. Okay, so just a quick show of hand here. How many of you this is the first time you're attending my Facebook Live? Just type me in the comments, or just type me so that I know, because the Market Insights Virtual Summit is coming up very soon in January. So I suppose there will be some new people who are inside the MarketWise Asia community. If it's the first time you are with us, just type me in the comments, okay? And I also wanted you guys to join our Telegram channel. Okay, you should see the link on the scrolling bar over here, MarketWise Asia. All right, let me post the link in the comments as well. So we have about 4,002 already, 4,002 people in the Telegram channel. So do register for our Telegram channel. Okay, so I always give the updates, latest news, price mover, and of course the upcoming Market Insights Virtual Summit that's coming up in the January. Okay, so one over here, Long SJ, the first time. Okay, welcome to MarketWise Asia community. And don't be shy, if it's the first time you're watching me, just type me in the comments, so we will warmly welcome you. All right, so let me share my screen over here. Okay, let me share my screen. Oh, I haven't posted this yet. Okay, just before we kickstart this session, all right, so just want to share with you guys in case you are new to MarketWise also and don't know about this Market Insights Virtual Summit. It is coming up on the 8 and 9 of January. And very simple, just go to the site. I'll post a link in the comments over here. All right, so post a link in the comments. Okay, and let me change my settings banners over here so that you can see also. Okay, just head over to the link over here. All right, so this is the Market Insights Virtual Summit. Just click on the register. Takes just less than 10 seconds, your name, email, and your mobile. The mobile is only used for SMS reminder and nothing else. Okay, so do not be afraid of spam. Okay? We will not spam with any other things. Just purely SMS reminder. That's it. Right? Okay, so name, email, and SMS as in your mobile. And of course, Alexander Elder will be the keynote speakers over here. Okay, and there are quite a number of so-called heavyweight speakers, resident speakers as well. You know, Colin Sell, Terence Tan, both Terence from IG, Terence from Impossible Investors, and we also have new speakers, Stuart Murphy from Australia, and new speakers such as Willie King. All right, he'll be talking about dividend investing also. So there'll be lots of content over here. And of course, you'll be also giving out some awesome prizes over here. All right, so we are giving out a free staycation that's worth 400 plus Sing dollars at Park Royal collection over here. And of course, there are some e-capital voucher and also Grab vouchers up for grab. Okay, pun intended. Okay, so these are $50 voucher. So do register for this event so you can learn. You can also stand a chance to win these awesome prizes. So why not, right? So we need to register so that at least we know who to give out the prizes to. Because if you don't register, we don't know who to give out to because we don't have your contact. All right. So I'll post the link once again in the comments. So do register for this event. Let me post the link once more in the comments. Okay. All right. Okay. So without further ado, let's kickstart this session over here. All right. So I don't know how many people will actually attend today's session because it is the eve of Christmas Eve, 23rd of December over here. Oops. Okay, so let me zoom in over here, picture in picture. All right, so as usual, the disclaimer over here, whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. So Alex is always wrong. Please don't copy me. Okay, so right now we have about 186 people in the room. Okay, but we only have about 30 likes. Okay. If you don't mind, at least just give me a like and share on this Facebook Live. Liking is free, doesn't cost you money, but it also tells Facebook that Facebook algo that you want to see more of MarketWise Asia content in the future. Okay, so because if you don't engage with me, Facebook will think that you don't like our content, and in the future you start showing you less and less of our content on your Facebook feed. So please give us a like. Okay, if you can, just also share this out to other people as well. So give us a like and share as well. All right. So today, the topic is actually pretty simple. Okay. The market has been on a roller coaster so far heading into Christmas. Okay. One day up, one day down. How do you trade in this kind of volatile condition? Okay. And before I kickstart, just another quick show of hand right now, right? So how many of you are actually, bullish about the market, about, in the coming 1 to 2 weeks into the new year, the first few weeks of the new year? So how many of you here are actually bullish? If you are bull, type bull in the comment. If you are bearish, type bear in the comments, so that we can have a consensus. We can have a understanding of the group mentality over here. All right. If you are bullish, just type bull. If you are bearish, just type bear. Heading into the new year, the first few weeks of 2022. Okay. No need to be so far ahead, just in the first few weeks. All right. If you are bullish, just type bull. If you are bearish, just type bear. Okay. And today, I'm going to share with you something interesting also. All right. This is the volatility of VIX. Okay, which is called the VVIX. Okay, I think this is something new to me. I'm not sure how many of you actually heard of this VVIX. Okay, I will share with you later. Okay, this is definitely something new to me, so I'm going to share with you. I hope it will be something new to you. So let me take a look at the comments right now. Okay, let me take a drink first. All right, so quite a number of boo. Danny is bear. The rest I can see is boo. Christopher Singh says bear. Chen CH says bear. Sufian says piggish. What is piggish? Gordon says bear. So uptrend under pressure. I think today it is slightly different. So it seems that more people are feeling bullish now. So the sentiment changes from neutral to bullish today. So I remember last week, right, when I asked whether you guys are bullish or bearish, right? It's kind of 50-50 lah, okay? And yep. MH, yes, from Bini Ong, this is BVIX, sorry. So by the way, just now I mentioned about the BVIX, volatility of VIX, right? I know some of you here are Bini students, so if you watch her market outlook video, you should know. For those who are not, right, if you haven't heard of VVIX before, all right, just type no in the comments. Type no in the comments. All right, just type no in the comments. So later I will share with you this VVIX. Okay, the volatility of VIX. Okay, something that's interesting. If you don't know, just type no in the comments. So let me go through the stock chart right now. This is the S&P 500 futures over here. Okay, so today it is a very bullish day. Okay, so the S&P 500 futures is up 0.63%. The Dow Jones is up about the same 0.63%. The Nasdaq also about 0.6%. So let me go to the stock chart over here first. All right, so let me zoom in over here. Okay, so you can see that market generally is bullish. Everything is basically all bull. Okay, so the indices all bull. Even the small cap, mid cap, they're also bullish as well. Let's take a look at the bonds market. Of course, typically when the market it is bullish, the bonds price will tend to come down. Generally, okay. So today the 20 years bonds, the bonds market is down. Okay, so it's down 1.11%. Commodities is kind of mixed, but yesterday was actually pretty bullish for commodities. Crypto wise, generally is bullish as well. So today the let me see this equities. Just happy. The sector summary. All right, the best sector for today is actually the industrial and the materials. All right, so let's take a look at the S&P 500. So of course, you have been following my Facebook Live for the past many weeks. Okay, I always maintain that the market it is still on a this is my trend line. So if you feel a bit messy, just remove it. So overall, this is still in a strong uptrend. So just a recap for those who are new over here, for those who with me for the past many weeks, right? When the market is here, I still call for a buy over here. That's in October when it started to pull back. When it started to pull back again in at the start of December, I also call for a buy also. And it's only actually last week that I'm sort of bearish because of certain factors which I already explained in my previous video, based on the market breadth and some of the ratio that I'm watching out. I won't repeat again. So if you want to understand why I was bearish, okay, you could refer back to my previous last week video. All right, last week video. Okay, so do you think right now there's a Santa Claus rally or not? Okay, so last week when I actually mentioned that I actually shorted here, I was bearish. So when price came down, I had some decent profit lah. But subsequently, price actually reversed back up. This is where I decided to, something is not right already. So I decided to take profit. So at the end of the day, my short was profitable, but just a little bit profit. I mean, that decent profit, but not a lot. Okay, it's definitely less than one time my risk, but never lose money. So it was still profitable. So I covered my short, and subsequently price just reversed back up. So to me, it is price is still kind of consolidating. Okay, for the S&P futures. So this is the high here, right? So the price here touches one time, two time, three time, four time. So right now we are touching the resistance for the fifth time now. So will the fifth time be lucky? All right, the answer is I don't know. I don't know. Okay, but generally the price action it is bullish right now. Okay, and yeah. So to me, price is still stuck in this big range over here, which is between about 4,007. Okay, 4,007 and 4,005. Okay, it's quite a big range. 4,007 and 4,005 over here. All right. Okay, so this range over here. Okay, for the Nasdaq wise, it is also kind of in a range over here. Okay, for the Dow Jones. Okay, Dow Jones movement is more volatile, so down up again. So but generally to me, in my personal opinion, okay, let's go back to the S&P 500. Okay, the futures, which I generally look at this index. Okay, so I won't be, for me, I won't be going long now. Okay, to be honest, my personal bias is neutral now, neutral. So I'm not particularly bearish or bullish. So of course, right at this moment in time, price action is definitely bullish lah. Okay, but I'm still neutral and slanting more towards the cautious side and slightly bearish a bit lah. Okay, neutral but slanted a bit towards more to the bearish side. I'm not sure whether you guys can, trying to say what I'm the feeling that I'm feeling right now. So I'm cautious, okay, neutral, but I am prepared for the possibility that price, could, maybe do a breakout again and then come back down again. So this is one possibility that which I think might happen. I don't know, but this is my thinking over here. Okay. So, of course, some of you here are 50-50, bullish, bearish. Okay, some, not 50-50. Most of you here, I think about 2/3 of you here are bullish. Okay, all right. So, let me see the comments. No, 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 no. So, okay, so most of you say no. So, I'm going to share a view. So, of course, this VVX, okay, will also lead me to be more cautious about the market right now. All right. So, at this point in time, okay, just a caution over here. We are hitting into the resistance for the S&P 500, hitting into the resistance now. So if you are buying now, also what I always say, TMP lah, 头脑派, okay. When it's here, you don't want to buy, okay. Up to the here resistance, then you buy. Something is wrong with you lah, okay. When you buy here, right, the risk reward is not actually there already lah. So the swing low is over here. Of course, you can place your stop loss over here or here lah. But to make it more sensible, you should place it at the swing low lah. So because you are hitting right smack into the resistance, okay, you don't know how price will react, and if you buy now, price could do like this, and you will feel very painful. Okay, so for me, I don't suggest that you buy now. Of course, there are certain sectors or industry that are performing. But overall, I'm still a bit cautious about the market. Same for the Nasdaq. Okay, of course, Nasdaq, you can say that price broke this trend line over here, and we are heading into a new breakout, new trend. So I don't know how we will fare also, because right now we are heading into the end of the year already. So most of the traders or the institutions, some of them are taking a little bit more break time off, and the liquidity tend to be lower, and volume tend to be lower as well. Okay. All right. So, okay. So will the Santa Claus rally override this support? Okay. So to me, at this moment in time, I still don't feel there is a Santa Claus rally. Okay. So let's compare that to last year, December. Okay. Last year, December over here. Okay, so can you see that last year, December, it is over here, right? Over here. So December over here, generally, it is a bullish month for last year. Okay, the year before, let me see. The year before, of course, is COVID lah. Okay, so but the year before, 2020, okay, the December Christmas rally is actually over here. Okay, this power here, So it is from here. It is also from the start of December until the end. It is also bullish. But for this year, I'm not trying to prove that I'm right or what, but to me, it is really not a Santa Claus rally. It is really price stuck into a kind of a range over here at the start of December. Okay. Ping pong. Of course, towards the end of the year, it is slightly bullish. But overall, I repeat, for those who are new to me here, I am still generally neutral, but slanted more towards the bearish side. All right. Okay, so the reason why I am cautious, okay, it is also because of this VVIX over VIX. Okay, today I'm going to share with you this ratio called VVIX over VIX. Okay, I don't claim that I know this myself. I also know this recently. All right, through Bini Ong. Bini Ong is one of the speakers at the previous summit, the Asia Trading Festival. So she is also a one of the SGX Academy trainer, and she is very experienced, much more experienced than me. And a lot of things I also learned from her. So, for example, some of my triggers, including the wash and rinse trigger, it is also from her. So, for those who have been following me, you should keep hearing me saying about this wash and rinse trigger lah. So it is from her as well. So during her recent market outlook, she actually mentioned about this VVIX. Okay, for those who don't know first, okay, let's go to the VIX first. Okay, VIX. Okay, I'm sure you know that people know about. I'm sure some of you know about. Okay, I'm sure most of you know about VIX lah. Okay, or at least heard before. People call it the fear index. Fear index. Okay, fear index. Fear index. Index. So basically, when the S&P, have a huge drop, the volatility, the VIX will go up. So let me go through an example over here. This is the VIX. Okay. So if you guys have heard of VIX, right? Okay, VIX, VIX. If you know VIX, just type VIX in the comments. Okay, do engage with me. All right. So this is the VIX over here. So can you see over here, when there's a volatility, when price start to drop, okay, then the VIX will go up, will spike up. All right. So of course, this is the 2020 when there is the COVID sell-off, right? When there's a lot of fear, right? A very classic example, where VIX will just spike up to very high to this 80 level. So most of you here should know lah. So when the market is generally, peaceful uptrend, all right, the VIX tend to stay at a low level over here. Okay. Of course, along the way, there will be some correction. When there's correction of the market, then when there's more fear, the VIX will tend to spike up. All these are generally small pullback in the market, in the index. Okay. So VIX. Okay. So I won't go through that again. All right. So you know VIX, okay. So VIX is essentially the fear index. Okay. So what is actually VIX? The layman term is called the fear index, okay. But actually, what is VIX actually calculating? Okay, VIX is actually is calculated using the implied volatility of the options of the S&P 500. So IV in short, it is called IV, the technical term IV. So IV implied means expected. So the future volatility. So when the traders expect, or based on mathematical options, okay. So when they expect that the volatility of the S&P 500 it will increase, right? Okay, then the VIX also increase. So basically, the VIX, okay, is calculated using the IV of the S&P 500. As I mentioned, right, if the IV increase, right, so the VIX will also increase. So which means that all these spikes, meaning it's because the IV actually spike up. That's why the VIX also spike up. So the VIX is actually calculating the IV of S&P 500, right? I think you guys can get it, all right? All right. So basically, the IV is part of the options formula, one of it, okay? All right. So what is this VVIX? Okay. So basically, VIX is basically that's calculating the volatility, right? VVIX is actually calculating calculating the volatility of volatility. Okay, volatility of volatility. VIX itself is already measuring the volatility. Okay, the VVIX, the VVIX is actually measuring the volatility of volatility. So it's measuring the volatility of VIX. Can get it or is it confusing or not? If it is, if you guys can understand what I'm trying to say, type yes in the comments. Okay. So this is something like maths, right? derivative dydx already dydx. Okay, dydx differentiation okay. VIX is measuring the volatility. Okay, so the VVIX is measuring the volatility of VIX. So it's measuring the volatility of volatility. Okay, if you guys can understand what I'm trying to say, type yes in the comments. Okay, I hope I don't mess up my explanation. All right, so the VVIX itself, right, is measuring the IV of the out of money put options of the VIX itself. That's why it is called the measurement of the volatility of volatility. Okay. Yes, Stephen, you're right. So it's the rate of change of the IV. That's right. Rate of change. Okay, rate of change of the VIX lah, basically. Yeah, IV lah. So to put it, this is a correct explanation, the mathematically correct explanation. Okay. VIX, acceleration, something like that, okay? All right, so you guys understand, can understand, right? So yes, okay. So I won't go into the details. So essentially, you can use, all right, the VVIX over VIX, the ratio, all right, to determine when there's some, at the, how to say, when market is at the bottom or when the market is near the top where you should be careful. So treat it like overbought, oversold first. Okay, before I go into that, right, because VVIX itself is already a derivative, so it's like second order one. So adding in a ratio somehow might make people more confused. Okay, what do you mean by VVIX over VIX? Okay, so I'll just share with you this first. So along the way, you if you remember, sometimes I use ratio, right? So for example, okay, if I put a ratio of XLK over SPY, for example, only, so I'm trying to see the ratio of whether XLK is outperforming or underperforming S&P 500, right? You get what I'm trying to say? Okay, so if I put XLK, this is the tech sector, right, versus the SPY. This is a ratio, right? This is a ratio, right? Okay, so all right, you can see that generally at the start of the year, as in the XLK over SPY is up, which means that the XLK, the tech sector, is actually outperforming the S&P 500 index as a whole, which means that if you just invest in the XLK, you should perform better than the XPY itself. All right, Hannah. So you know that the ratio, you're just essentially trying to understand whether one is outperforming or underperforming something. Okay, so in this case, the XLK is outperforming the S&P 500. All right, so follow me. All right, so you can use this VVIX, VVIX. Okay, just search in Trading View. All right, then you can just slash. All right, then the VIX. All right, so I can do number 2 on the VIX. Okay, this use the index lah. Don't use the Trading View CFD price. Use the index. Then just enter. All right, so you churn out this chart lah. Okay, this is the ratio of VVIX over VIX. Okay, the VVIX itself, right? VVIX itself is very similar to the VIX itself lah. All right. So as I think who mentioned, right? Stephen mentioned the rate of change of ID, right? Yeah. So very similar to VIX itself. So we wanted to use the VVIX over VIX. Okay. So yeah, over here. All right. So you can do it using a line chart, which I already have a template for it already. So I'll just show you over here. This is the VVIX over VIX. Over here at the top, VVIX over VIX, okay. And at the bottom, this one is the S&P 500. So essentially, we want to see whether the ratio, the volatility is, the ratio, right, is outperforming the VIX itself, which means that there's increased volatility of the VIX, okay, compared to the VIX itself, all right? Or the VVIX is underperforming the VIX itself. You get what I'm trying to say? I think it can be quite confusing, okay? All right, if you don't understand what I'm trying to say, it doesn't matter. Essentially, just understand that, use this VVIX over VIX, okay? We can try to, in a way, you can see whether the market is actually in a complacent state or or in a very fearful state. Okay, so can you see over here, right? Generally, okay, you see the S&P 500 here over here first. Okay, so we mark out the bottom of the market. Okay, generally you can see that the market over this part over here, this is a bottom over here, right? Bottom, this kind, right? Okay, so I'll just mark out using a vertical line first. Vertical line over here, and then there's this very obvious one. A very obvious one is is correction, and of course this is the COVID sell-off over here. All right. So can you see that you can treat these VVIX like a overbought or oversold indicator. All right. So and this is the upper range over here. The red line that I've drawn, the green line is like the lower range over here. All right. Can see, right? If you guys can see, I think there are many lines, but do try to follow me. Just follow me the top one here. The red lines, you can treat it like an overbought kind of a reading. At the bottom, the green line, it is like the oversold reading. So you can treat it like this is the fear, extreme fear, and extreme greed, something like this. Okay, extreme fear, extreme greed. Okay, and when there's a market correction over here, okay, you'll see. Okay, over here. Okay, over here. Okay, so we can treat the VVIX as a certain range of here. Of course, the very extreme one where the VVIX reading is at reading 3, okay, which is at the bottom, which is the COVID sell-off. Okay, but generally, price don't always go so low. So at about reading 4, it is quite low already. And typically at a short-term correction, right, the reading is at about 5. So this is my dotted line over here. Can you see this over here when price hit the reading 5, the market will tend to rebound. 5 tend to rebound over here at 4 tend to rebound over here. Break below the 4 is quite oversold already. There's fear, so this is also we tend to rebound as well. Of course, the COVID sell-off is the extreme. All right. Okay, so at level 3, I think not many chances okay. And the previous time, go back to 21.9 where the VVIX over VIX is at the 3 level. I'm reading 3 over here where price will start to rebound already. The same when the market is complacent, is at the top when reading is about 7 to 8. All right, you can see over here 7 to 8 is somewhere around here, somewhere around here. Okay, basically this region over here when there's price will start to correct if there's a correction over here. Okay, can you guys understand what I'm trying to say? If everything is okay, just type okay in the comments. All right, so I'll just do a recap over here to get the VVIX over VIX. Okay, VVIX over VIX, just type VVIX, right? Then you slash the VIX to get the ratio. And the ratio is to see whether the rate of change of the IB, okay, there's some underlying changes as in the VIX might not show, but the volatility of the VIX might show. So we want to see whether it is increasingly volatile or the volatility is actually decreasing. All right. If you can understand what I'm trying to say, just type yes in the comments. Okay. Steven is asking whether the ratio is to cancel off the noise. In a way, yes, because if you just use VVIX, right? If you just use VVIX, it can be very messy also. Okay. Where is it? Okay, so this is the VVIX. Here it's very similar to VIX as well. Okay. I don't see any comments. So you guys don't understand what I'm trying to say, is it? I don't see any yes, yes, yes. So you guys are confused. If you're confused, type, okay. If you're confused, just tell me confused, type confused in the comments. If you understand, just type yes in the comments. All right. Can follow or not? Yeah. Just let me know whether you guys can follow me. Whatever comments that you want to type is fine. Okay. Adrian is asking how to plot the S&P on the lower half of the chart. Okay, very simple. So this is by the default chart is like this, right? Okay, sorry, also a bit messy right now. Let me go through this. Okay, so this is like normal chart S&P, right? So if you want to type the VIX over here, for example, VIX, okay? So you want to put in the S&P comparison at the bottom, all right? Just go to this button over here, this plus button at the top of TradingView. There's this plus compare or add symbol. All right, then you just put SPY, then you put on a new pin. Then this is where you can put the S&P 500 at the bottom of the chart. Okay, so I'll go back to my VBIX over here. My template over here. Let me see. Okay, so back to line chart. Line chart is easier to see now. All right, confused. Meme can follow. Okay, yes. I think one or two confused. Okay, but doesn't matter. Essentially, all right. If you don't know how to use this VBIX over VIX, just use it as it is right now. VBIX over VIX, and treat the readings as overbought, oversold. So when the market is at an extreme fear, all right. For example, the COVID sell-off, when the VBIX over VIX, the ratio is at the bottom, it could potentially mean a bottom. Okay, all right. At the same time, when it is at a high over here, which means that the market is very complacent, like over here, coincide over here, it keep going up. Okay, there's a possibility. Okay, at any time the market could have a pullback, a sell-off, or a crash. Okay, we won't know, but we know that the market is complacent, there's greed. Okay, so at the top, at about 6 to 7, at about 7, the reading where the market is complacent. At the bottom, okay, when about 3 to 4, market it is actually there's a fear over here. So at a intermediary kind of a correction, the normal pullback, right? Generally, the price, the VVIX ratio is at about 4 or 5 about there. So when hit the bottom, price will tend to rebound up All right, okay. Just treat it as that. Use it as it is first, okay? While you try to understand more, doesn't matter. And what I want to show you is that over here, the weekly time frame over here. This is actually what Bidin showed to me also. I'm just basically sharing with you what she shared to me, okay, in the market outlook. So the credit goes to her. I think I might not be the best guy to explain, but this is also something new to me. So you can also use this VVIX ratio as to see whether there's divergence or not. Divergence, which means that see this COVID sell-off over here, right? COVID sell-off over here. This was the COVID sell-off in 2020, right? All right. In fact, there was a okay. Use the daily time frame easier. All right. So this is the daily time frame. Okay. This is the COVID sell-off. Can you see that? Sorry, let me try to make better. Okay, this is better. All right, so can you see that when price in the 2020, before the COVID sell-off, when price was actually heading up, okay, the VVIX over VIX ratio, the ratio is actually, there's a divergence. It is coming down. This is a high, this is a lower high, this is a lower high. All right, this is a high, this is a lower high, this is a lower high. Can you see? Market going up, but the ratio, there's a divergence. Can see? Okay. So back to this 2008 in September, when the market is actually, heading higher. All right, and and then the market actually had a subsequently a steep correction over here. Okay, the same thing happened again where the market, where the ratio is also showing divergence. It's coming down where the overall the market is coming up also. All right, can get it, divergence. Okay, now we are back to the latest price action over here. How come we are action over here? Wow, never mind, change back. Okay, so right now we are back again over here. Okay, overall, okay, the market is heading higher. Okay, but the ratio is showing divergence as well. Okay, can see this is the high, this is the high, this is the high, make a higher high, the index make a higher high, but the ratio is making a lower high already. Okay, and then it's a lower high again. So this is something that you might need to be cautious of. Again, I'm not trying to say that the market will crash. Don't get me wrong. For those who are new to me, I have always been bullish about the market. Even if it's coming down, it's more of a correction rather than I would say a crash. Okay, so I'm just telling you that you might need to be careful. That's the reason why I say that I'm neutral right now, but more slanted towards the slightly towards the cautious, the bearish side. Okay, all right. Darius is asking, right, how to get the green and dotted line. No, the green and dotted line is just my own line only. Okay, so you can remove that one. You can remove that one. So when I first drawn, there's no line. So I just drawn a horizontal line. Horizontal line is just like this. Okay. Then the horizontal line. Okay. Then just put over here. All right. This is just to show me certain level where I think it is at a high level or at a low level. Okay. So this is just a very simple horizontal line only. So you can edit yourself. Okay. Back to the VDX. Okay. For the commitment of trader, I sometimes look but I realize sometimes I cannot really make sense of the COT. I do take a look, but the COT itself cannot give me one standard answer that it is going to be bearish or bullish. So a lot of factors need to come into play before I make an overall decision, a final decision. So COT is one of them, but not always I look at it. Sometimes I see, but if it coincide with confluence of certain factors, like which I think that the market can go down, which the COT can also kind of the data also show that it might come down, as it might come down, then okay lah. But generally, not the main okay, not the main one that I'm used. All right. How do you determine those red and green lines? The red and green lines, right? It is just use your visual. Can use the weekly time frame. All right. So, just focus on the VBIS ratio. So where is the high reading? Where's the low reading? Okay. Can you agree with me that somewhere around here is the top region and the bottom here is the low region? Can, right? So this is visually. So you can just put a horizontal line somewhere around here, alternate H. Visually, this is a high area, and the bottom somewhere around the 4. Okay, this is a low region over here. And of course, intermediary, there's certain areas where it seems that price will always touch at certain price level over here. Okay, over here. So this is an intermediary horizontal line also, where there's a certain kind of a support, if I could say that. So this is something like this. So this is using the best fit method. There's no really a scientific method, because this is not an oscillator. So the number can go to 10, 14, 15, that kind, or it can go to 2 and 1. So it is not a fixed reading like the stochastic, Williams, or the CCI. Okay, you get what I mean? All right, Ken. Let me take a look at the comments over here. Yeah, Stephen say yes, this is lines to aid visual. Yes, you are right. It's to visually aid the ratio. Okay. Sandra is asking, when you are cautious of the market, what do you do to start to take profit and cut loss? I think Sandra, are you new to me or not? I think maybe you are new to me. So for me, I am primarily a swing trader, and swing trader meaning that I hold my trade for a few days to at most about 1 to 2 weeks, that kind. Okay, I do take position trade. Position trade means that I do hold for a few months, that kind, 3 months to 9 months, that kind lah. But right now, I do not have any position trade only when I feel that there's enough correction, when there's steep correction, then I will do a position trade. Right now, I don't see much opportunity. So for me, right now, I don't have I only have one position only. That's it. Okay. Yeah. The rest I've already exited already for my swing trade. One position only. Okay. So yeah, I'm holding for trading. For trading wise, I mainly cash trading account. So this mainly for the short term ones. Short term wise. All right. So the recent one, like for example, I mentioned previously. Okay, like for those if you have been following me, okay, I mentioned that I took the IYR, like the real estate. Okay, it is actually going up. It's quite nice, but I really took profit lah. So I first entered swing trade so I hold for a few days. That's it lah. I entered here, exit somewhere around here lah. A few days correct lah. Then even for the latest one, wood. All right, so I also entered here, somewhere around here. I exited somewhere around here, so holding for a few days also. All right, and even for the natural gas, which I mentioned before, UNG, right, this is a very nice trade also. I shorted here, okay, and it came down all the way. I think I take profit. I think a few days ago, yeah. But today it came down even further lah. Wasted, but never mind. It is fine. All right. So even for like GDX, gold miners, I also shorted somewhere around here. Okay, and then I take profit somewhere around here. Yeah. These are my swing trade lah. Okay. The position that I'm holding right now is actually USO. It is the oil. Okay, that's the oil. The oil. So I shorted oil somewhere around here. Okay, and it came down, take some profit. Okay, and I shift my stop. So I didn't shift my stop. So I thought it would come down, so I didn't shift. So I think most likely it will be a break-even trade. So yeah, so this is the only position, short-term position that I'm holding right now. Okay, so for the S&P 500, right? Right now I won't be taking any position or any sectors or industry trade. So I'll be just staying at the sideline. So to me, it's very simple. If I am not sure of the market of such, right, which I think the overall market might come down, right, then I will not do anything. So I think don't need to trade every day lah. I mean, if I don't feel right, I don't feel as in the market doesn't move the way I need to move, right, then I just don't trade. You get what I'm trying to say now? So for the S&P 500, okay, if I really want to trade, right, at least price they need to break above the resistance, okay, possibly and then a pullback, and then I will try to add. I will only enter around there, and then hopefully it will go up lah. So I'll look into other sectors and stocks as well. But right now, I will not enter into any position. Okay. For me, Alex, is like a squeeze. Can you give me some tips to know if it's going for a breakout? What do you do when there's a squeeze? What kind of squeeze do you mean? You mean for the S&P 500 or for the VVIX ratio that I'm sharing just now? For the breakout, if you realize for this year, okay, so for this year over here, let me go back to the naked chart over here. Okay, for this year, you realize that market like to do a kind of a false breakout. Okay, so let me try to zoom in over here. At the start of the year, all right, this is the resistance over here. When you thought it breakout, price came back down. All right, and then again over here, you thought it's a breakout over here. You thought it is a breakout over here. Okay, boom, and then price came back down again. All right, again, breakout over here, price came back down again over here. Okay, and many cases lah. Okay, when price do a breakout over here, they ping pong for a while. Okay, go back a bit higher up, and then came back down again. All right, so in this case over here, a breakout over here and then came back down again. So actually 2021, it is not like 2020. Okay, it's you trade breakout, very easy to fail. So after so many times, you should know that trading breakout is actually not the best trade lah. Not the best trading ideas lah. Okay, so again, I also won't count on this breakout will go like that lah. So it could fail like this, or it could do a breakout. It could do a breakout, okay, breakout, and then a pullback, and then I'll wait for you to enter like that. Okay, all right. You get what I'm trying to say? Why Lam is asking, right? How do you, where is it? How do you add the S&P at the bottom? At the bottom. All right, at the bottom. I think I mentioned just now already, right? So basically you add this plus button over here, okay? And then you search for SPY, and then there's a new pane over here. Right, then you will see the S&P. You don't need to put S&P lah. Oh, sorry, I think it's blocking, right? Yeah, I repeat again. I repeat. So you can just go to this plus button over here, search for SPY or whatever ticker you want. Right, then you put new pin over here. Then you show the chart at the bottom. And if you want to, by default, it's a line chart. By default, it's a line chart. So if you want to edit the line over here, then you can go to line or bars or candles or whatever. So by default, it is line. Okay. Steven is asking, right? I've been following your analysis and trading style. Do you use any tool to automate? Automate, no. So, but I have a screener that tells me when there's a potential trigger that I can enter. So I'm using market in out for the screener. Backtest, I'm not that programmer style, so I don't really backtest. So, but I think being profitable is the best thing, I think, to show that the method works lah. So it is always based on, in a way that I can say that forward testing lah. Okay, I always have some idea, I just test a little bit. The market in out can do a back test, but I tried before, but the back testing, it's not the best lah. I mean, the way they back test, there are certain factors cannot really the actual entry and exit rule cannot really fit me. So the back testing is not the best result. So I really don't count on that. So for me, I'm not a programmer, so I don't really know how to really do a back testing strategy. So I just test forward test lah. I use money and test lah. So far it's been profitable lah. So I think that's the best really lah. Yeah. Okay. Any other question before I move on to some of the trade ideas that to give you guys for a New Year present? All right. Any question? Before I move on, right, just want to share with you guys again. All right. Let me share with you here. Banners. Okay, do sign up. No, sign up. Where is it? I cannot find. Telegram channel. MarketWise Asia Telegram channel. Do subscribe to MarketWise Asia Telegram channel right now. With about 4,002 people in the channel already. So where I give my usual latest updates, price mover and such. Right, so do subscribe to it. And we also have this Market Insights virtual summit that is coming up on the January 8 and 9 over here. For those who just joined us, you are just in time. Okay, so we have Alexander Elder, the author of the Trading for a Living, one of the first book that I've read on trading, and he's a very renowned trader and also teacher as well. All right. And of course, we have other speakers as well. You can take a look at the speaker's profile. Right now, we haven't updated the title yet, but I can say that it is quite interesting. I think if not mistaken, like Chris Long, okay, will be sharing with you the 3 crypto trend for 2022. Yeah, the 3 crypto trend for 2022. So as you know, crypto move very fast. This year has been the year of, I would say that is DeFi and NFT. NFT is overtaking DeFi also in a way that I mean the popularity from what I'm seeing also. So moving forward in 2022, what could be the next big thing in the crypto world? So Chris will share with you the trends that he thinks that is coming up in 2022. So very interesting. So do just register for free. Just fill in your name, email address, and mobile, and you are good to go. Just less than 10 seconds. I will post the link for you to register in the comments over here. Okay, so let me post the link in the comments. So do register. It's free. Okay, totally free. Proudly sponsored by IG Markets over here. All right, so let's try to play back. Okay. Para is asking, do I believe in trading bots? Market condition changes. I don't believe in 100% trading bots. You cannot just let it trade 100% by itself. Even for Bini, where she does a lot of automation, she also don't use 100%. Okay, so far I see a lot of traders that they are using automation and such, but they don't use it 100%. So there's some interference when it need be. Okay, when the market condition changes and such. So I don't think a robot can make you profitable day in, day out, every single day. If that's the possible case, I don't think, as in, it doesn't exist. I mean, I know, but I haven't heard of it. Even for institution traders, I know there are bots, okay, but okay, it's not 100% also. So at a certain point in time, there's interference from real traders where like the normal traders outside, where they interfere on what is the algorithm when the market is starting to change, something's happening in the market. That's why I know. Okay, I don't believe 100%. It could help you, but not 100%. All right. Okay, so moving forward, okay, let me share with you in January. Let's say, for example, in January, okay, let me go through that. The market continues to head higher, and there's a breakout. Okay, there's a breakout, and there's pullback, something like that. Okay, or when it's clearer that the market is going to head higher. Okay, what could be moving? Okay, what are some sectors or industry that you might be looking at? All right, so this is the spreadsheet that I've done myself. I'm trying to zoom in. Okay, so December, you can see November, December. Look at this table over here, green. So generally, November, December, it is a good month. So this is the sectors. So take a look at January. Okay, so is it good or bad? Of course, the green one is the most positive one. Okay, orange 65 to 69% is positive. Blue is 50 to 64%. Okay. All right. So take a look. January, just a very concise glance. Do you think it's an okay month of January? Okay, it is kind of neutral. Okay, there's not so good sectors. Okay, normal sectors, and the better one is actually the healthcare sectors for January. For January. Of course, it doesn't mean that this is a seasonal. It doesn't mean that it definitely goes up. Okay, so I'll be sharing with you certain sectors that I am looking at. Okay, by the way, red doesn't mean that it is negative. It can be just a slightly below 50%, could be 45%, that kind of. So it doesn't mean that it's negative. I'm just trying to finding the best sectors. So I'll just skip I'll skip energy. I'll just straight away go into healthcare Okay. Again, red doesn't mean that it is very bad. It's just that I will want to skip it. Okay. I repeat, red doesn't mean that it is bad. It's just that I want to find the best sector to help me choose the options, easiest option to choose. So easiest option to choose is either choose tech, healthcare, that kind. I won't choose the rest of the one that's red. Can? So let me go through this thing over here for the upcoming one. Let me try. These are the previous one which I mentioned. Okay, real estate pretty bullish, bearish. Natural gas is also correct. Okay, look to buy. Okay, now into January 2022. Okay, So the health sector, XLV, of course, this is generally the sector. If you want, you can look into individual stocks. Okay, for example, even Pfizer recently has been bulldozing up all the way. So like XLV from 3rd Jan to 19 Jan. Okay, this period, 19 Jan. All right, I can move up. Okay, XLV, health sector, 3rd Jan to 19 Jan. For the past 11 years, okay, it is up positive 91% of the time, which means that for the past 11 years, 10 years, it is positive. Okay, positive. Can? All right. Actually, for generally, for the S&P 500, it's also positive in January as well. Okay, so 6 Jan to 16 Feb. All right, based on seasonality, all right, for the past 10 years, okay, 90% of the time, which means that 9 years it is positive. And then you might also want to take a look at gold also. Gold is GLD. Gold for the past 10 years. Okay, 10 Jan, okay, at the start of the January to about 4 Feb. 4 Feb. Okay, 100% of the time, 10 years, it is positive. Okay, same for SLB silver. Okay, about 10 Jan also. 10 Jan to 25 January. All right, 100% of the time, it is positive for the past 10 years. All right, so let's take a look at gold right now. Gold is GC over here. Okay, so GC, it is gold. This is the gold futures. It is actually in a mess right now. Okay, ping pong, ping pong, ping pong. Not that easy to trade. But if you take a look at the weekly chart, okay, it is, after doing a huge move upward in 2019 to 2020, this is sort of consolidating over here. So we won't know whether it is a continuation up move or not. But okay, we can take a look at the price action at the start of at the end, as in at the start of January. Okay, and we'll monitor the price action. So seasonals, I repeat, it is not a holy grail. We still need to see the price action to confirm. All right, so let's say, for example, I mentioned that for gold, right, early Jan, 10 Jan, so somewhere around maybe 5th Jan, that week or so, you can take a look at gold and see whether price is actually above the cloud and above the central pivot range. Okay, right now you can see that for gold, all right, after the V shape sell off, right now consolidating, it is not going down further. You guys get what I'm trying to say or not? So after a sell off, looks like a flat pattern, okay, and then boom, come down, but there's a tail over here. Okay, which means that price is not going down further anymore for gold. All right, can see over here, I try to zoom in again. So this is like a consolidation, okay, and then there'll be traders who shorted gold thinking that it is a continuation of the downtrend, but okay, price of gold didn't go down further, but instead moving up higher. So this is price action wise, this is positive for me. And right now, price is actually, price action still looks good to me. Okay, so if you look at this candle again, okay, bar by bar analysis, this is a shooting star, right? So people see a candlestick shooting stars, right? They think that is bearish, right? So they shorted it, price go down for a little bit only, price cannot go down further and reverse back up again. So this is again a positive price action to me. So I think we can start to monitor gold already. So maybe at the start of January, monitor gold again, see whether there's a signal, a trigger for you to go in as well. All right, for gold, we can, this is how I analyze gold for now. So no trigger for now, wait a bit more, but I'm monitoring gold and silver. And for XLB, it is very bullish lah, okay? For health, this was the prior resistance, breakout, retest, and price is trying to go back to all-time high again. So we shall monitor for the entry again. So for health sectors and for the gold, these are the two that I'm looking at. And of course, if you want to take a look at the individual health stocks, of course, you can take a look at the stocks. Okay, so you can go to etf.com/XLB. Right, XLB over here. The usual, okay, the usual stocks if you have been trading for a while, the usual health stocks, okay, United Health, Johnson & Johnson, Pfizer, Thermo Fisher, Abbott, Abbey, and Co. and such. Okay, you can if you want to go at the individual health stocks. Okay, for me, but I like to trade the S&P, as in I like to trade the sectors as a whole, ETF as a whole. So any question right now? We are into the 1 hour mark already. All right. Just a quick show of hand, right? How many of you actually registered for the Market Insights Virtual Summit already? So if you have already registered, right, just type me in the comments. Type me in the comments. Well, I'll take a break. Para is asking, how come most of the analysts are saying that there is a big possibility of a market crash this January or February? Again, analyst is analyst. If you know the author of Rich Dad Poor Dad, Robert Kiyosaki, has been calling for a crash for how many donkey years already? I don't know. And for the past 2018, 2019, 2020, every year call for crash. I think the latest one for this year, he was mentioning that, October, there'll be a crash. So every year there's a crash one. I mean, I don't know whether this, to me, this is like fear mongering now. Okay, to me, this is a fear mongering because if you call for a crash, eventually it will crash. People will think that you are an expert. You are the one who called for the crash. But people don't know that he has been calling for a crash for don't know how many freaking years already. Okay. At the end of the day, a broken clock will also tell the right time 2 times in a day, right? So yeah, to me, eventually it will come. Okay, but most of the time, the market it is in a uptrend. Okay, so don't try always thinking of a crash lah. Okay, try to follow the trend. For me, at least for me, okay, I think for a lot of people also follow the trend. When market is on uptrend, there's a pullback. But of course, you can be bearish. Like I am cautiously bearish, but bearish doesn't mean that I'm thinking that the market will crash. Okay, I'm just thinking that there might be a pullback, and I'm waiting for the pullback to enter into a position. That's what I'm trying to say. So of course, there are analysts saying that market crash in 2022 will be right, will be wrong. I don't know. Okay, I don't have a crystal ball. If I think I wish I have a crystal ball, but I do not know. So just follow the price action over here. And oh, fantastic. So a lot of you have registered for the Market Insights Virtual Summit, right? Fantastic. Okay. Let me see the areas. For the futures, 21st December, Nasdaq futures, 21st December. Yes, there is a wash and rinse pattern. Okay, there's a wash and rinse pattern. Okay, there's a wash and then there's a rinse pattern. Terrence, okay, the wash and rinse is my trigger signal. A lot of times it's my trigger signal. I'll share with you the link later. So the reason why I didn't enter is that my bias is still a bit negative. That's why I didn't enter the trade. So I'm afraid that when price do like this and then price will come back down again. So because my bias is negative, as in is bearish one, so I didn't take a trade. Even though if you are bullish, okay, this is a perfectly nice trigger you can enter for the wash and rinse. Okay. So yeah, but my bias is inherently a bit bearish, so I didn't take a trade. So I didn't take a trade. So be it. I'm fine with it. So I didn't take the trade because I was bearish. Okay. So for those who are thinking about what is this wash and rinse trigger, right? So you can go to this website. Let me show you the link. What is Vinny call it the alien wash, the alien wash, wash and rinse alien wash. okay? Go to the site over here, bit.ly/TAW-MAW. I'll post the link in the comments. So you go over here, over here. Okay, so this is the training course over here. There's this module 1, the Alien Wash module 1, where you share with you the basic concept of the wash and rinse. Okay, module 2, it is paid. It is not free, but okay, I want to share with you this very good lobang. Okay, now there's still ongoing offer. All right, the cost itself is $700. Okay, but okay, by the 31st of December, okay, if you take up this offer, there's some terms and condition. All right, they'll refund you the $700 if you open an account and trade with these two brokers over here. All right. Minimum funding 200, but you get back $700. Of course, you need to trade a minimum of 2 standard lot. Very simple to achieve one, okay? And then 1 standard lot. Okay? So there's still ongoing promotion, but if you don't want, doesn't matter. At this point in time, you can still go to register. I can still go and attend this module 1 course for free. All right, I'll post the link once again in the comments. So you roughly understand why is this a wash and rinse pattern over here. Okay. Any question so far? Any question? If not, I think I will call it a day already because Christmas. Okay, it's Christmas. I don't want to hold you back too much time. There is asking, is part of your negative bias? It is just not just purely on the Nasdaq. It is what I mentioned in my previous Facebook Live. You know, I was watching some of these the small cap, mid cap, big cap, plus the high beta stock versus the low volatility stocks. I feel that the market doesn't seem right to me. Of course, this is just my personal opinion. I could be wrong, and at this point in time, like it feels that I'm wrong already because the market it is bullish, very bullish. Okay, of course, I could be wrong. So heading into the new year, it could just continue to head higher. All right, then I'm completely wrong. Okay, doesn't matter to me because I just stay out of the market. You get what I'm trying to say? If I'm bearish and I don't want to trade, then I just stay out until I'm in line with the market. Then I'll go trigger. So you need to understand this. So for the past 2 months, okay, I entered my swing trade. I managed to catch this low. Okay, right. I managed to catch this low. Good profit over here. I managed to catch this low over here. Also good profit. So that this low I didn't catch it so doesn't matter I mean I just keep it and it is also towards the end of the year already, so I just take myself a break so until the next year when I start to go full year into trading again. All right. Yep. There's no best oscillator for the indicator that I'm using is on the chart right now. I'm using the cloud, the pivot point, and also the central pivot range. So I share with you how I install this indicator on YouTube. You can take a look at the link over here in the comments. All right. So I think last call over here. Do subscribe to MarketWise Asia Telegram channel and also register for Market Insights Virtual Summit. Okay, and stand a chance to win the CapitaLand voucher, staycation, and also the Grab voucher. And we have lots of content coming up. I think all very powerful speakers over here, and the content should be awesome. Okay. All right. So without delaying you further, I think this is the end of the session for today. And tomorrow is Christmas Eve. I hope you guys enjoy your festive period. All right. And I think the next session that I'm going to share with you guys, I think most likely should be the 30th of December. I won't be sharing on 31st December. The 31st December is a Friday, New Year Eve. So maybe next Thursday again, I'll be sharing with you guys. So yeah, I think that's all. So have Have a very Merry Christmas, and I will see you guys again next week. Merry Christmas and enjoy your holidays. Good night. Bye bye.